It is time for the financials of Zillow. In this video, I'm going to be having a look at the kind of most up-to-date earnings for the first quarter of 2021. And also I'll have a look at the annual report for 2020. So you have that kind of complete picture. You have their most up-to-date revenue, and also you have that big picture revenue. Now, if you haven't seen my video on Zillow where I look at the business side of things, then I would recommend you actually check that video out. It will be linked in the description down below, so you can go and have a look. But in terms of the financial things, firstly, it has the ticker symbol of just Z, so quite simple and easy to remember. It has a 52-week range of $64 all the way up to $208. It has an earnings per share of 23 cents per share, which is, it's not great, but it's not bad. And it has a market cap of 27.7 billion. Looking at the graph over the past day, it's in the green. Past 5 days, it's also in the green and looks like it's been climbing quite steadily. The past month, it's in the red. It looks like it was dropping until the 19th of July, and then it slowly started to pick back up. 6 months, it's really in the red. I mean, it looks like it had a high of almost 200, and then, yeah. 1 year though, it is in the green. It did have like that high, and then kind of dropped back down, but it looks like it's picking back up ever so slowly. 5 years, it's also in the green. And looking at its max, it's in the green. Starting with their annual revenue for 2020, so you get that kind of complete picture of a year. Now, Zillow is an online marketplace for properties, and it makes money through advertising, but it also makes money through charging kind of transaction costs relative to leasing or listing properties on its website. Now, one of the other things I would like to point out before I get into the revenue side of things is that their kind of yearly visits went from about 8 billion to 9.6 billion. So actually increased by 1.6 billion comparing 2019 to 2020, which is quite good. Here we actually have a breakdown of their revenue. So they kind of get revenue from 3 different sections: through their home segment, their IMT segment, and their mortgage segment. So the home segment is actually related to how much they make through selling properties on Zillow. So with their total home segment, they made in 2019 1.3 billion, and in 2020 1.7 billion, which is quite good. It's a nice increase. The next part is their IMT segment, which is actually related to their ability to advertise kind of properties and real estate agents. Zillow has a lot of active monthly users, so they make revenue by charging advertisers to advertise to those users. The total IMT, so media technology or advertising revenue, for 2019 was 1.2 million, and for 2020 1.4 million. Now, the mortgage segment is just related to them kind of offering loans as well. Revenue from that was 100 million in 2019 to 174 million in 2020. So their total revenue for the years, 2019 was 2.7 billion, and for 2020 was 3.3 billion. Now, Zillow actually makes the majority of its kind of margin through its advertising. It doesn't actually make that much money through selling the properties online or mortgaging the properties. As you can see, the revenue for selling the properties was 1.7 billion, but in terms of the cost of revenue for selling those properties, it was 1.6 billion. Whereas from the advertising, their revenue was 1.4 billion, and the cost of revenue for that advertising was only 100 million, which is a pretty good margin, I would say. They also actually have quite a good margin when it comes to their mortgages or loans, 174 million against a cost of 31 million. Now, they do have a very large cost when it comes to sales and marketing, technology, and general and administrative. Most of it coming from sales and marketing. But the reason that is it pays over time is because the more people they have using their platform, the more kind of they can charge advertisers and the more interest they get from advertisers. Now, if we actually have a look at their net loss for the year 2020, it was 162 million. Comparing that to the year before, though, it is an improvement. So you can see that they make most of their money through advertising. It's not through selling properties, and it's not really through kind of loans. Advertising offers them not only a massive amount of revenue, but also a very good gross profit in terms of margin. But that was for the year of 2020. Now let's actually have a look at their first quarter for 2021. Looking at their assets, cash and cash equivalents went from 1.7 billion to 3.4 billion. They literally doubled their cash. In terms of total assets, they had 7.4 billion at the end of last year to 8.2 billion ending in March 31st. Looking at their liabilities didn't actually change that much. I mean, it went up like 1 million. For their actual revenue though, for the first quarter of 2020, their revenue from selling homes and selling properties was actually higher than what it was now. It was 769 million to 704 million. However, the revenue coming from their kind of digital advertising kind of segments actually increased by 116 million, going from 330 to 446. They also made more money through kind of Zillow loans, so loaning money. Total revenue was higher by about 100 million. Now, it's not actually that bad a thing that their revenue for selling properties went down. They managed to make more money through their digital advertising and also through their mortgages, which is where they actually had the better gross profit margin. When you look at their revenue from selling properties relative to the cost of revenue, it's not that great. But when you look at their revenue from advertising relative to their cost for advertising, it's pretty good. So when you add it all up and bring everything together, you end up with a net income of positive 51.9 million. When you look at last year, which was a loss of 163.2 million, that is a big difference. Now, they have had a stock offering at some point because their balance from the 31st of March 2020 was 212.9 million. Whereas their balance in the 31st of March 2021 was 247.3 million. Now, their finances are going in the right direction, and they are, by the looks of things, they're prioritizing the revenue coming from their advertising services rather than through selling properties, which is actually a good thing because it was making more money through the advertising than what it was through selling the properties. I'm not saying that they should neglect it altogether, but it is looking like their finances are getting better. I mean, if you compare the same quarter for March 31st, 2020, where they lost 163 million, to this quarter where they had a net increase of almost 200 million. In fact, a little bit more. So going from 163 million in loss to positive 51 million is quite a big jump. So yes, to bring everything together and to give my final opinion on it, I actually really like the business idea behind Zillow. My main kind of issue was the fact that it was only in the United States. In terms of the financial side of things, I think that it's starting to move in the right direction through generating more money and revenue through the advertising side of things rather than the selling of the properties. Its revenue is going in the right direction. It seems that its priorities are also moving in the right direction. So in terms of the company, yes, I really do like it. And it's something that I would consider investing in. But I will say this again and again and again and again, and I know some people might get tired of hearing it. Do not base any buying or selling decisions on the content of this video. This video is not intended to be investing advice. Most of the time it's just me expressing my opinion on some companies. So please do extensive research before you buy any company and just take everything with a grain of salt. Don't trust me. Sometimes I get things wrong. In fact, I get things wrong all the time. That being said, if you have enjoyed this video and found it informative, I would really appreciate if you hit that like button before you go. Thank you very much for watching, and I will see you next time.